Have you ever looked at your savings account and just wondered if there's a smarter way to make it grow? You know, a way that doesn't feel like you're playing a high-stakes game at a casino? Well, it turns out there is. And it's less about risky bets and way more about a simple, incredibly powerful engine for building wealth.
So, let's get right to it. Can you actually get rich without playing those risky games, without the constant stress of trying to pick the next big thing? The answer is a resounding yes. Absolutely. And the secret isn't about becoming some kind of stock market wizard. It's about fundamentally changing how we think about what investing even is.
To really get on this path, we've got to tune out all the noise and just focus on one super simple idea. It all starts right here, with the concept of owning a tiny slice.
Okay, forget the blinking charts, the scary red and green arrows, all of that stuff for a second. At its core, a stock is just this, a tiny slice of ownership in a real company. So when you buy a share of, say, Apple, you're not just buying some code on a screen. You're buying a tiny piece of every single iPhone sold, a piece of every innovation that comes out of their labs. You literally become a part owner. It's really that simple.
Now, there are a couple of ways you can go about this. You could buy a single slice, bet big on just one company. And hey, that can be exciting, but if that one company stumbles, your whole investment is in serious trouble. Or you can take a much smarter approach, buying a whole collection of slices from hundreds of different companies all at once. This is what we call diversification, and it's your built-in safety net. It's the foundation of a rock-solid strategy.
So we own these tiny slices. Great, but how in the world do they grow into something substantial? Well, that brings us to the real engine of wealth creation, the incredible power of compounding.
The logic here is just so direct and beautiful. When the companies you own a piece of do well, they innovate, they sell more stuff, they make more profit, your little slice of that company becomes more desirable. It becomes more valuable. Your wealth grows simply because the businesses you own are succeeding.
But here is where the real magic happens. It's a simple 4-step cycle. Step 1, you buy your slices. Step 2, those companies do their thing. They grow. Step 3, your slices get more valuable. And then, and this is the most important part of all, Step 4, your growth starts generating its own growth. Think about it like a tiny snowball rolling down a hill. The gains you made last year are now part of the snowball, helping you pick up even more snow, even more gains this year. That is compounding.
So what's the secret ingredient that makes this whole machine just hum? It's not some hot stock tip, it's not a crazy amount of luck, it's just time. The data is super clear on this. The journey to really significant wealth isn't a sprint. For most people, it's a marathon, about 30 years of just letting the process do its work.
And this chart right here shows you exactly why that long-term view is so critical. I mean, look at the jump from 10 to 20 years. That's pretty good, right? But now, look at the leap to that vibrant gold bar at 30 years. Wow, the growth isn't just steady, it accelerates. It goes exponential. Most of the wealth isn't built in that first decade, but in the last one, when your snowball has turned into an absolute boulder.
Okay, so this all makes sense. But how do you actually do it? How do you buy hundreds of these slices and just let them grow for decades without it becoming your new full-time job? Well, luckily, there's a tool that was designed for exactly this. This is the Smart Simple Path.
The vehicle that packages all of this powerful logic, this whole strategy, into one simple, easy-to-use tool is the index fund.
So why is this thing so effective? Well, an index fund lets you instantly own a tiny slice of hundreds of companies just by tracking a market index, like the S&P 500. That's basically the 500 biggest companies in the US. It gives you automatic diversification. You're not betting on one company anymore. You're betting on the growth of the entire economy. It's incredibly low effort, and it's built specifically for that predictable long-term compounding growth we just saw. It's that collection of slices, prepackaged and ready for you.
So let's put all the pieces together. How does this simple tool, combined with the awesome power of compounding, connect you to building a potential 7-figure future?
And, this is the secret that isn't really a secret at all. Building serious wealth doesn't have to be about the adrenaline rush of a risky bet. In fact, for most people who actually succeed, it's the total opposite. It's about taking the boring, predictable path. It's about being consistent, being patient, and just letting a proven system do all the heavy lifting for you over time.
Which, of course, brings us to the most important question of all. Now that you've seen how simple this concept really is and how powerful that engine of compounding can be, is your wealth on the compounding path?